real-time real estate segment brought to you by rsrmoney.com. Real-time real estate brought to you by rsrmoney.com. The down payment assistance you did not know about. There's a lot of them. Believe it or not, almost 80% of first-time homebuyers qualify for down payment assistance, but only 13% actually use it. And if you're hoping to buy a home, this is a mission-critical gap to close. Again, take a look at the chart that we're showing you. If you're watching us on RonSiegelRadio.tv, any of our socials, ABC News and Talk, AM 1490 video feed. And if you're watching on any of our socials, make sure, give us some love on there. Right? Hit the like button, subscribe button, thumbs up button, whatever you're seeing out there. Heart, I think, is another one. I don't know what other ones there are, Josh. Josh will know those things. But you've got the like, the subscribe, the thumbs up, the heart. I don't know. There's a lot of them. But you're seeing a chart. More first-time homebuyers qualify for down payment assistance, but few use it. 80% qualify. 13% are actually using it. Here's what you need to know to make the most of your down payment in today's housing market. Amplify your down payment potential. For first-time buyers, the name of the game with down payments is making sure you're taking advantage of all the resources out there designed to help you. And a bunch of them can get you to your goal faster than you may have thought possible. For example, there are loans that require as little as 3% down or even nothing down for certain qualified borrowers like veterans. We love our veterans. There's no down payment for veterans. So if you're going into lease, you could buy that property for a smaller down payment. Let's not forget down payment assistance like grants and other opportunities that help you cover the upfront costs of your down payment. If you're interested in exploring those options, what you may be able to use to your advantage, give me a call, 800-306-1990, 800-306-1990, because if you don't at least see what's available, you could be leaving money on the table and missing your chance to buying a home. These resources can boost your down payment, and a higher down payment could help lower your eventual monthly mortgage payment and even avoid or reduce your fees like private mortgage insurance. You might even use that money to buy down the interest rate permanently. Don't let news headlines about down payments scare you. There's one more thing to address. News coverage has been talking about how the typical down payment is rising. A report from Redfin states, quote, the typical down payment for U.S. homebuyers hit a record high of $67,500 in June, up 14.8% from $58,788 a year earlier. This was the 12th consecutive month the median down payment rose year over year, unquote. But don't let those high dollars scare you. Just because the average down payment is rising doesn't mean down payment requirements are going up. That's a key piece of the puzzle to understand. It's really just because people are choosing to put more down to try to offset higher mortgage rates, and current homeowners who are putting their equity to work are using that to increase their down payment on their next home. As Housing Wire explains, quote, buyers are putting down a higher percentage of the purchase price to lower their monthly mortgage payment, and buyers also had more equity from their home sales, which gives them more cushion, unquote. Now remember, is it smart to put more money down? Well, if you do it strategically, it might be, but take a look at the book we've got out, rsrlinks.com/YCLA, rsrlinks.com/YCLA. We are certified liability advisors. We help you build wealth through the liabilities, doing those the right way. Let's break down the two reasons a bit. Number one, a bigger down payment helps lower your monthly mortgage payment. Affordability has been a challenge for many buyers recently, which is why those who have the ability to make a bigger down payment are going to do so in an effort to lower future housing costs. Number two, buyers who already own a home have a record amount of equity to leverage. Someone who bought a home a few years ago has gained a significant amount of value in their house thanks to home price appreciation. These people can put down much more than the average first-time buyer who hasn't owned a home yet. But should they? Let's think about this. If you had the ability to put 40% down, and instead of putting 40% down, you put down 25%, and you use 3, 4, 5% to buy down the interest rate, your interest rate becomes the same. So let's just use the number that you use, 5%, but you have 10% extra. That's $60,000, say, on a $600,000 loan. and you take and invest that into some safe and secure investments, and that's earning you, maybe 10% interest. Stock market has been going up 20% lately. I don't want to use that number because that means more risk. But I do know some investments, and I know some folks that sell them. I don't, so I can't share it with you. But you can get 7 or 8 or 9% very, very safe. Get that money safe. Think about that. So now you're borrowing at, say, 4.5 or 5, which you can do if you buy down the rate, and you're getting 8 on the return side safe. Okay, so now your money, you're doubling that leverage for yourself. Buyers, bottom line, what's the best thing to do? Give me a call at 800-306-1990. Book an appointment with us. You can go to rsrlinks.com/bookrs15. Quick 15-minute consultation. rsrlinks.com/bookrs15. That's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com.